Welcome to the Ninjacators real-time supply and demand indicator. First, our disclaimer. While there is potential for profits, there is also a risk of loss. A loss incurred in connection with trading futures contracts can be significant. You should therefore carefully consider whether such trading is suitable for you in light of your financial condition, since all speculative trading is inherently risky and should only be undertaken by individuals with adequate risk capital. This is not an offer to buy or sell futures contracts, futures options, stocks, stock options, forex, or commodity interests. The real-time supply and demand indicator. So what does this indicator do? Well, its key features are that you can use any market. And here's an example of an Apple. Apple stock. This is a stock, so it will do stocks. It's a 60-minute chart. Notice that you've got some areas here. You've got some green zones here. These are demand zones. This is where there's a congregation of buyers. Here is a supply zone. This is a congregation of sellers. Another example is a currency. Notice that you can also do currencies. This is not just for futures. It will work on any market. So you also have multiple supply zones and multiple demand zones. We'll talk about those in detail in the future. Here's a 1-year chart on a daily, and you can see there's lots of demand zones. Notice that there is one little tiny supply zone up here, and on a long-term chart you're going to see it one direction because the trend is in one direction. So anyway, that's a daily chart. So you have any market and you can use any time frame. You saw the previous charts. There was a 60-minute, there was a daily. Here's a 5-minute. This is a 6A. This is an Aussie dollar future contract on a 5-minute chart. Okay, so this is just an example of a 5-minute chart. You got some supply zones up here, some demand zones. So any time frame. You can also use multi-time frame calculations. This is kind of cool. This allows you to have more than you can have. This is a 5-minute chart, but it's got a 60-minute supply and demand zone. So you can specify the time zone that these zones are based on. You can still have a 5-minute chart. And a lot of people go, why would you want to do that? Well, I want to see the 60-minute zones because I'm more interested in those longer-term zones. But I want to see the 5-minute action. Okay, so this would be a great example of why you would want to do something like that. So you can have a time frame that is different than your time chart. Okay, so you can have multiple time frames. The other thing you can do is any type of chart. You can do a tick chart, a Renko, volume, any kind of non-time chart. Here's an example of a 610 tick chart with a 5-minute supply and demand zone. Notice that it creates zones during all times, during the hours. This is created during the off hours, just around midnight. We've found that you want to make particular care when you use these zones. Although they do work, they are created with low volume, and so we should exercise extreme caution when trading these zones, simply because there's not enough statistical data that these zones are based on to be statistically relevant. Okay, so keep that in mind when trading in off hours, that it is calculated based on low volume, and we should keep that in mind. You can see down here you have supply, and you have supply zones on the top and demand zones on the bottom. So any type of chart. It's based on the laws of supply and demand. It's inherently programmed into this indicator, the laws of supply and demand. So how can this indicator help you with your trading? Well, first you have to define what is supply and demand. Well, supply is sellers and demand is buyers. And without these two pieces, a market will not function. This is the core of every single market. It doesn't matter whether it's used cars, corn, currency, or a stock. It does not matter. It has to have these components. It has to have sellers and it has to have buyers. So it must have supply and it must have demand. Okay, when there's more aggressive sellers than buyers, price falls, and when there are more aggressive buyers than sellers, price rises. This is again the core of every market. This is the basis for market movement. So when there's a bigger imbalance in supply and demand, there are great trading opportunities. That's what this indicator does. It's specifically looking for imbalances in supply and demand and giving us a zone in order to take advantage of that imbalance. Here's an example of a Renko chart. These are always nice looking charts. when it's a Renko, and it's a Renko 3, but it's got a 60-minute supply and demand zone. So you want to you're going to fade these zones. This is a supply zone. So once this zone's established, and it establishes and it re-enters, when you get this entry right here, this is your first penetration of the zone, and that's your first entry. You want to take that short. Okay. You have a secondary entry, and you could wait till the second comes along, or you could add to your position here. We found that the first entry is always the best probability trade, and you want to always take the first entry, or so I should say the first time it tests the zone. So when it tests the zone, again, you had 2 entries here, so we're short. So the first thing we notice about this zone is that we can use this zone to help us determine the stop loss. This zone is 2 S&P points, and so that's approximately 8 ticks. So I'm going to put my protective stop just above the zone, because the idea is if this is a group of sellers, and these sellers are unable to keep price from going through, I don't want to be short this stock or this instrument anymore. In this case, it's the yes. I don't want to be short anymore. Once these sellers have failed, once this supply has been exhausted, I don't want to be in this anymore. Okay? Very simple. So also, as you're coming down here, you're still short. It bounces a little bit. A new zone is established. This is another group of sellers that has been established by this zone. And so we can move our protective stop or our stop loss down to a tick or 2 above this zone. Again, the same rationale applies. If this group of sellers fails to keep price down or this supply is exhausted, you definitely do not want to stay short this. And you can see as you move down in time, you could move your protective stop along with it. Now, once you get down here to the bottom, here we've got a bounce, and all of a sudden you get a demand zone. Okay, this is an area now that we've determined is a large number of buyers. This is demand. When it comes in here and it comes out, we know that the buyers have stepped in and are pushing price up. This is a great place to get out. Okay, because once this demand has, these buyers have successfully defended the price, and price has reversed direction. Therefore, we don't want to be short anymore. So a couple ticks above this zone, and I'm out. So in summary, a real-time supply and demand indicator will detect zones of supply and demand. These zones are high probability reversal zones, which can be used as entry points, exit points, or points to place a stop loss. You can use this as a standalone, which is as I explained it here, or you can use it as a complementary with an existing system. We're going to show you examples of that here in just a second. I'm going to move over to live charts, so please stand by. Okay, I have opened NinjaTrader and have put up a clean chart. This is a brand new chart, has nothing on it. And what I'm going to do is I'm going to add the real-time supply and demand indicator. Anywhere inside the chart, you right-click, you go to Indicators, and you can bring up the real-time. And you will find that it is right there. RSD is for real-time supply and demand. Say New. And now we have brought up all the different parameters. So we're going to go over some of the parameters very quickly here. First, the short logo. You can say true to this, and it will make there'll be a logo over here. It's a Ninjacator logo, and you can make it small or it can be large. If you say true, it's going to be small. Let's extend the zone. When we get the zone, actually I'm going to show you about that here in just a second. We're going to go ahead and just say OK, so you see what it looks like straight out of the box. Okay, so we say OK. So you can see here is the Ninjacator logo. It's very small. That's what you can change that from false to true. It'll go very small down here in the corner. So this is a 1-minute 6B chart, and because we did not set any of the parameters, the chart period is also the time frame. So it's a 1 minute, so this is a 1 minute zone. So we have a demand zone here, and we have a supply zone here. Now the reason why they're different colors here is because the pink, the darker pink or red, is a active zone. A lighter pink one here, or coral color, means that it has been activated. So it started over here, it came out, right there was your entry for this short, and it changed colors. When it changed colors, it also gave you an auditory alert. Same with down here. This was a dark green, but it came down here, and so this zone is now, you had an entry onto this zone, and you would have, when it came down here and changed color, you also had an auditory alert. So I'm going to go back into the indicators and go back into the parameters, and I want to extend the zones. Alright, so the extend the zones allows me to move these zones into forward time, okay, future time. Here's real time. Real time is here at the very right side of your screen. By saying extend the zone to true, it will extend past real time. I say, okay, I'll apply this, and I'll have to say okay here, so you can see I'm going to pull this back. So here's real time, but it extends the zones so I can see the zones out in about past real time. Okay, that's a really nice feature. Go back into indicators. This extend zone minutes means that I can extend the zone for 60 minutes. Okay, this is a 1-minute chart, so that's pretty far. You can adjust this. If you want to change that to 5 minutes, you will see that it's going to dramatically move. So here's real time. It only extends it out 5 minutes. So extend the zone minutes gives you a length of time that you can extend that out into the future. No weak zones, we leave this as true because it will show you secondary zones. However, it's not necessary, and I find that I do not use the weak zones, but you could say false here and show weak zones. I'll show you what that looks like. There are different colors, so this is a weak zone. I don't use them. I'm not interested in them, but for instance, why you would do this is if you're on a higher time frame and you wanted to see weaker zones within the bigger zones. Okay, so I leave this as a true. And the retouch color, okay, this means that you're going to change color whenever it touches. Whenever it comes in and touches, you want it to change the color. That's true. And they also have a recolor weak, which is false because we're not showing the weak zones. So that's why that would be false. It's very important here that you time frame. Your time frame type says chart period. That means it's going to default to whatever the time chart, whatever the time on the chart is. So this is a 1-minute chart, so it's going to default to a 1-minute chart period. And the time frame 0 will also default to the chart. Most of the time we do not want these settings to be that way. We want to specify. This is also the way you make it work with a tick chart or a Renko chart is you have to specify the chart period, and the chart period is going to be minute. That's the most predominant, and then you can specify what minute. So you want the 3-minute or you want the 5-minute. We'll set this as a 5-minute. So this is a 5-minute zone on a 1-minute chart. Okay, so I get to see the detail of a 1-minute chart, but I want the time frame of a 5-minute chart. So I go, okay, you can see how that opened it up a little bit. The higher time frames are going to have zones that are farther apart. So I'm going to go back into the indicators. I want to go through all of these parameters with you. All of these parameters you want to leave alone. Just leave them as defaults. This false forces this to be real time and not on the bar close. We want to keep it that way. All of these defaults here you do not want to mess with. Just leave those as is. Okay, here is where you can turn your alerts on. So when it enters the zone on the demand side, you can set that, and you can also set it for the supply side. So when it goes into the supply zone or the demand zone, it gives you a audio alert. You can say alert 1, you can make up your own wave file, but any kind of wave file in here. So this is a really nice way to customize. You can see that I have created demand zone. Let's see, this is the 6B, so let's see, I need a demand zone for, I don't have a demand zone for the British pound, but yes I do, right there. So that says demand zone, and I've got that in the wrong place. It should be up here on the demand sound, should say demand zone British pound. So what it actually will say, when it kicks that, it says supply zone or demand zone British pound. It actually says that. And let's see, the supply zone, I've got 2 of them there. Those I've customized. You can do that too. So it'll say supply zone alert British pound. That way if I have multiple charts up, I can see exactly which chart it is. Okay, so you can customize those. This bottom section is a way you customize all the colors. You can change the colors. You click on a color, use a pull down, and it brings up a menu. You can change those to whatever you want. I leave them the way they are as defaults, but you could change those. And I'll give you an example of why you'd want to change those here in just a second. These draw text, leave these alone. These are defaults that just need to stay that way. Okay, so that's the basic defaults. We'll say OK. All right. The other really cool thing is mixing and matching your zones. So we have, notice you also have some toggle switches up here at the top. You have a SD zones off, and it says 5 minute. So if you forget what you have it set at, this will tell you 5 minute. Now, if you change the chart from a 1 minute to a 60 minute, it doesn't matter because the zones are still 5 minute zones. So when you set those parameters, it stays static. So whenever you set the time as 5 minutes and a minute, it stays the same no matter what the chart changes to. We could change this to a tick chart and it would be just fine. Okay, and I'll give you an example of that. So we can go over here to here. Let's see, we want to go to data series, and I'm going to change it from a minute chart to a tick chart. Say OK. And you can see that it changed it to a 150 tick chart, and the zones are just fine, and these are 5 minute zones. Now this toggle switch here is SD zones off, and it turns them off, so you don't have to have the zones on the screen. You can click it on and it comes right back on. Not a big deal. Okay, so now the other thing, I'm going to change this. Actually, I'll leave this the way it is. Supposing you want to add more than one zone, you can do that. You can go in here and go to indicators, and we just add a second real-time supply and demand indicator, which we're going to do real-time supply right there. I'm going to say new, and that adds a second one. So the first thing I need to do is I need to make sure that the chart period is minutes and that I put a value in here. So let's show a 60-minute zone as well as a 5-minute zone. So we can determine that they are more than one zones on one chart. And to differentiate between the 60-minute and the 5-minute, I'm going to change my colors. Remember, I talked about changing the colors, and this makes sense. So we're going to change the demand strong color from green to something totally different. Let's use yellow. Oops, not light yellow, I want yellow. And the retouch color to say gold. So once it triggers, it's going to turn gold. And on the supply, strong is red. Let's change it to something totally different. Let's go to purple. Purple. And the retouch from coral, we'll change that to another type of purple. Maybe a light purple. How about violet? Now all I've done is just change those so we can differentiate. So apply. Now you can see that there are multiple zones. There are multiple supply zones. The 60-minute is the purple, and the red color is the 5-minute. Now we can turn one off. We can turn the 60-minute off, so you just see the 5-minute. We can turn the 60-minute back on and turn off the 5-minute just by toggling those switches. Okay, so it's a really cool way to put multiple zones on the same chart. Notice that there are prices out here. These prices are entry prices for the zone. Out here is the price of the zone. This is the entry price. If you do not want to see this price, you can go down here to the bottom and you can say main edge price, and you can say false, and that will get rid of that. See, that went away, except for I'm working on the 5-minute zones. This one is on the 60-minute zone. You'd have to go into the parameters for it to turn it off. However, you also have the ability to use the far edge price, which is not only this price but also the opposite price. You can say far edge price and change that to true, and that will give you both prices. turn that back on true. You'll see here it gives you the top price as well as the entry price. On the short side, the bottom one is the entry, but this is the top of the zone. And you can say the zone height, which is basically the spread between them. You can say true, and it will tell you what the spread is. In this case, it's 2 ticks. Here it's 3 ticks. Here it's 3 ticks. And so that is a nice thing to do. If you don't want any of those numbers to mess up your screen, you just go through and turn everything to false, and it will go away. So that is a really nice feature to be able to do. And there you go. So all of the 5 minutes are off, and I can switch very quickly to the 60-minute and also turn that off as well. Okay, so there you go. I'm going to show you some additional uses for this, assuming you want to use this as a complementary. Supposing you are a trend line person and you've got a trend line here, so we'll put a trend line out here. And maybe you're a Fibonacci person, so let's do a Fibonacci as well. Okay, so you've got a couple of things going on here. You've got potential areas that are interesting here. You might be looking for this trend line and this 38 fib as a potential entry point. Okay, so let me highlight that. So this is basically an entry area where you've got a trend line that would be resistance, and you have a Fibonacci. So let's add the real-time supply and demand indicator. Okay, so you go in there and you find the real-time supply indicator, and I want to say this is a 5-minute, and my chart period is minute, and everything else I'm going to leave alone. I'm going to say OK, and it generates some zones. Okay, and what's really interesting is that this zone right here, we can extend that zone out into future time, and the way we do that is we extend the zone to true, and we can specify 60 minutes is fine. I'll say OK. Okay, so we extended the zone out. We had to go out pretty far to do that, but look how you get a overlap of a zone as well as a trend line as well as a Fibonacci number. This would be a truly awesome spot to try to take a short right here. That's the convergence of 3 different methods. You've got a trend line method, a Fibonacci, as well as a supply zone. So that's how you would use this as a complementary indicator to an existing system. So in summary, you can do any market, any time frame, any chart style, multiple time zones, stops and targets. If you have any questions or comments, you can give us an email at webinar@ninjacators.com. You can also use the customer service at ninjacators.com if you have any technical support issues with your indicator. If you can't get it downloaded, can't get it loaded, customer service at ninjacator.com. Hope you have a great day trading, and I hope to see you at one of our webcasts in the future. Thanks.